with gold nearing 1,000 and oil hitting an all-time high. Should investors be looking to invest in commodities? Well, joining us now with more on this, David Dietz and Keenan Hauke are with us once again. All right, Keenan, what do you think? I mean, with gold and oil, I mean, they don't really have a CEO or CFO that can muck things up.
Well, gold and oil have been pushing to these new high levels because, as you mentioned before, the weak dollar, which is a reflection of this dramatic interest rate cutting campaign by the Fed. So we know where and why some of these forces are in play. And although there are all these commodities are susceptible to pullbacks from time to time, and I believe that we could be probably nearing one somewhat soon, there's a trend in place that's very powerful, and I don't think that oil stops until it reaches $150 a barrel, or we see a lot of these boomers dropping their SUVs by the side of the highway.
Yeah, they don't seem to be doing that recently. Hey, David, let's look at oil right now, because you got oil. I got to mention this real quick, up about $102, a little more than $102 a barrel right now. So we're not quite, David, at inflation-adjusted levels. We don't really know, and I think the range is like 97 to 104 compared to the high that we had back in 1980. So, but this is still the top we're talking about. So is oil a good play?
Well, there is a trend in place, as Keenan points out, but you know, trends always end at some point. And I think the real tough question for commodity investors is you have, without a doubt, a slowing global economy. That should mean less demand for oil. Companies aren't going to be running at full speed. People are going to be driving less. So higher prices, slowing demand, that spells concern for me. I mean, crude oil was up 60% last year, is not going up another 60% this year.
All right, you know, Shabani, you mentioned, I mean, we're looking at ways, it's like it's easier for people to get into commodities. I mean, this seems to be where the boom is going to come from.
Yeah, and, you know, I think the big issue here is that investing in commodities right now kind of goes against the grain of buy low, sell high. I mean, if you buy in now, you're buying at the peaks, and most experts out there are saying you shouldn't be buying at the peaks. You should be selling at the peaks. It's kind of going against the grain of thought that's really driven the markets over the since the test of time, essentially.
Keenan, I want to move you off of oil for a second. Talk about natural gas. You got natural gas prices up. I think it's let me check it, 26% right now. I mean, natural gas seems to be kind of the story we're not talking about.
Well, for the last 100 years, barring the last 6 months, natural gas and oil have traded at about a 7 times, maybe at most an 8 times differential. So if natural gas is at $10, 7 times that would give you the price of oil. And the traditional value has veered much more towards oil in the last year and a half to 2 years. Natural gas, in theory, should start to play some kind of a catch-up, and I believe that's what you're starting to see. A lot of the utility companies out there switching away from other fuel sources and into natural gas. There's even talk about putting natural gas in cars because it's a cleaner burning and an abundant fuel source right now. So I think the next couple of years, the trend could be a little more consistent in natural gas than it is in oil, again, for the next few years.
All right, David, what do you see on the horizon for commodities?
Well, on that natural gas point, that's one way to look at it. The other way is oil is too extended. It's going to fall back to restore that ratio. But, I mean, people are treating commodities as a big group, and it's just way overdone. I mean, if you look at the chart for wheat right now, you cannot distinguish it up 38% just year to date from Pets.com in 2000, right at the height of the internet. So it's a very dangerous type of situation. And the latest statistics are there's $1 billion of 1 billion bushels of red wheat held by commodity index funds, which is equal to 2 years of U.S. production. So the supply way outstrips the demand. It could change any time. You need to be very cautious playing this long right now.
David, you had to bring up the sock puppet. People are cringing when they think about that darn thing. All right, Shabani Joshi, David Dietz, Keenan Hauke. Thanks, guys.
Thank you.
What an